I think it's important to remember here there have been 12 high-level meetings now between the US and China on trade in the past year, and what we've got is just a whole lot more tariffs. So is it important to head into this October meeting with expectations well managed?
Paul, I think that you're absolutely right. We have 3 waves of tariffs that are currently going into effect. The first one on September 1, the second one on October 1, third one on December 15th. And that certainly adds impetus to these negotiations. Let's hope the number 13 is the lucky number at which we'll be able to find a little bit of a breakthrough here. But we have seen this movie before. The issue is the cycle broken, and will we get to a breakthrough either in October or when the 2 presidents meet at APEC on November 16th.
So China is looking for an effective outcome, in quotation marks. What does that outcome look like? What's the best we could hope for here?
Well, the Chinese have put down a few conditions. They want the negotiations to be balanced. They want them to be WTO consistent. So they have put down a couple of conditions. We'll see if the U.S. side is able to accommodate that. The U.S. side has approached this thus far as the aggrieved party and looking for concessions. Hopefully there is room for compromise here, but it's not obvious on either side that there is. On the Chinese side, state-owned enterprises, subsidies, industrial policies remain very difficult issues. And the Chinese side is obviously looking for a little bit of improvements in the trade relations. Is the White House willing to provide that? I don't know the answer to that.
No wonder we are seeing Chinese media now reporting that President Xi Jinping is telling the Communist Party to brace for a long-term struggle that could go at least through 2049. How are your members preparing for such a scenario?
Well, different companies have very different approaches. Those with supply chains between the United States and China are most hurt, or hurt most badly. Those who are producing in China for China are less affected. But I think everyone is very, very concerned with the uncertainty. Anyone wishing to make an investment is clearly affected, and many investments, not only American investments in China or Chinese investments in America, but American investments in America and Chinese investments in China have been put off. Third countries, be it Vietnam or Malaysia or Mexico, are picking up some of the slack, but the numbers are far too large for third countries to pick this up. So there's a lot of uncertainty, and investors are sitting on the sidelines.
And of course, if you can't move that supply chain, that also means that businesses will have to pay more. The tariffs are still in place. We have heard from President Trump this week again insist that prices for U.S. consumers haven't gone up despite the trade war. What are your businesses telling you about the costs that they have incurred so far?
Well, thus far, consumer price inflation is low. However, the new tariffs that came into effect on September 1, and then the third tranche that I mentioned on December 15th, are all for consumer goods. Now, those are going to be felt at the till. And of course, these tariffs are regressive in that lower income Americans will pay more as a percentage of their income. And so the political implications of this are just beginning to be felt. But that gives an impetus to the negotiations and hopefully will lead us to the end line.
Have you heard any evidence from your members of life getting harder for U.S. companies that are operating in China?
Oh, I think that it is definitely the case that American companies who are looking for approvals or licenses are worried that our Japanese or European competitors are being serviced much more quickly. Risk-averse Chinese bureaucrats are naturally less enthusiastic about approving, giving approvals for American companies. There have been some reports of increased inspections and audits. However, I don't think yet that that's at a systemic level. Thus far, I believe that the Chinese government has reacted to the United States side with a balance and with a carefully calibrated response rather than a nationalistic response.
Is a weaker Chinese yuan helping at all?
Certainly, the weaker yuan helps Chinese exporters and American importers, and it allows those supply chains a little bit more flexibility. But tariffs are going up, so from 25% to 30% and from 10% to 15%. And thus, if anything, that is merely a temporary swab. It is not a long-term answer. And as the president had noted, tariffs could go up beyond 30%. The markets were surprised when the president went from 25 to 30. There is no natural limit at 30%. They could go up further. If that is the case, certainly there will be an inflationary impact. The higher the tariffs go, the higher the inflationary impact and the more inefficiencies within supply chains.